Good afternoon then folks, as we are just about to start US trade on Thursday the 30th of November after a pretty non-eventful inflation print. That's kind of out of the way, but we're hoping for a bit of movement off the back of it, and that is completely the opposite as to what we actually did get. Everything bang in line with expectation. No surprises in either way, no upside, no downside, no higher than anticipated, no lower than anticipated, and that meant a bit of nothing, just a bit of chop across the major asset classes. They're starting to move a little bit of dollar strength, a little bit of stock weakness driven by a little bit higher yields. Nothing major at the moment. Be interested to see how they open up now. But we're flicking across the headlines, pretty similar headlines to what we had this morning. Wall Street set for higher open on peak interest rate bets. I mean, stocks are taking a little bit of a turn lower, but it's difficult to read into anything other than what we were having a look at this morning. You can see stocks slightly higher across the US, across Europe, and across Asia. So stocks kind of had a good day today on bets that rates have peaked. You can see yields are slightly higher. So yields higher in the US, driven by pretty non-existent inflation print, but maybe markets were hoping for a lower than anticipated print, then didn't get a lower than anticipated print, and that means a bit of ground has to be given back. But US dollar strong, not exactly strong by much. The rest of FX is relatively choppy. Yields pushing slightly higher causes a bit of downside, bit of pressure on the Japanese yen, with stocks slightly higher on the day. You'll see what I mean when I come around to some charts. I mean, you can see it's 1 30-minute candle lower on the Aussie, Kiwi 30-minute candle lower, Euro dollar cable pretty much the same, dollar Swiss, dollar CAD not doing anything, dollar yen grinding a bit higher. Flick across the equities, slight bit of downside across your S&P and your Nasdaq. Your Russell slightly higher. Your Dow Jones is pretty sideways. The DAX hasn't really reacted to it. None of these really doing anything, to be perfectly honest with you, which is a bit annoying. Yields pushing slightly higher, which I think is an interesting reaction to it, but it's not exactly much to reverse the trend, is it? I mean, you can zoom out a bit. The trend's been down for a while on yields, global yields that is, so that just looks like a bit of a pullback, probably to sell back into, and I don't think this inflation print really changes too much. You can see core PCE consensus 0.2, actual 0.2, personal income, personal spending, everything at 0.2. Oops, you can see everything at 0.2. Everything actually came in 0.2. Jobless claims in line with expectation. PCE price index slightly lower. Month over month, year over year, it's bang in line with expectations. So, yeah, I mean, what do you do with that information? A whole lot of nothing is really the answer to that. But is this just another opportunity to sell a rally on the dollar? I mean, we drew this level a bit randomly on the dollar index. One of the videos was yesterday or the day before. A bit of a pullback back to there. I mean, it was a bit of a random guess, but that's kind of where we are now. So, it'll be interesting to see if markets do pull back. I mean, you can start using some technical tools. I mean, you draw a bit of a Fibonacci retracement on. Same thing would have worked. Would have worked in and across here, just above it. Same thing would have worked in and across here. Rejected pretty well off of 50%. So you got a nice, clear, healthy trend where you got to push down. Decent pullback, push down, decent pullback, push down, decent pullback, another push down. You've had another decent pullback, so it'll be interesting to see if it does get sold back into. I still don't think the bias changes or should change too much. I mean, I still think the path of least resistance is lower on the US dollar, even though you are getting a bit of a pullback. But we spoke at the start of the week saying pullback in the US dollar would be understandable. It's not going to keep going lower forever. We've got that pullback now. Is this the level to sell back into it? I wouldn't say that these inflation figures do much in the way to dispute the fact that interest rates have peaked. Let's look and see if markets keep pricing into it, but maybe a bit of a difficult reaction to it. We probably would have hoped for a bit of movement in either way, but that's not what we've got. Stocks are selling off. Is that a bit of a repeat of yesterday? Maybe some month-end flows kicking in to bit of month-end flows kicking in, people taking profits on some stocks long. You can see it's been a solid uptrend over the course of the month of November. As I said earlier on, best month since the vaccine breakthroughs of 2020. So bit of a pullback into year end, absolutely understandable. Still don't think it changes much of a picture. I still do think long stock, short dollars is probably the way to play it. Is it the way to play it in today's US session? It's a different question, but I think once we get past this into the month of December and the month-end flows are out of the equation, I do think it's probably worth continuing on with this early Santa's rally. So long stocks, short dollars, we haven't had anything to change that. As long as that remains the case, probably the side of markets you need to sit on.